What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our market open live stream on this fine Wednesday morning here. Good morning, everybody. Thank you so much for joining. Market seems to be recovering well. We are seeing a nice little recovery for the NASDAQ, which is now green. It was down much worse. It was down about 40, 50, 60 basis points. At some point during overnight trading, we have the S&P 500 also flat, and NVIDIA, look at it go from 195 back up to almost 200. We've seen a very nice 2.2% rally for NVIDIA here. And of course, Tesla also pushing up over 1.5% at the moment. So we're seeing a very, very nice move to the upside for those two stocks here. Crypto also recovering a little bit. Bitcoin trading back up to 102,000 after testing 98,991, so a little bit under $99,000, and Ethereum also getting down to 3,200. It's now back up to over $3,300 once again. Volatility is flat, sitting at just under 19, and of course, a lot of individual stocks are also moving higher pre-market. So thank you so much for joining, everyone. And again, if you guys can see me and hear me, just give me a thumbs up. I have been incredibly busy all day. I'm yet to catch up on all the Discord messages because I was back-to-back meetings. I was doing my transfer for everything. I mean, it was just a lot of work over the last 8 hours. So I just got home and just quickly ate something, and then I wanted to go live. So I appreciate the patience. I will get back to all the questions. I know there's been a lot of questions on Discord, but I'll get to all of them right after the live stream, and we'll catch up to everything. So, Arun, Joe, Mr. BS Papa, thank you so much for joining. Welcome on board to the MoneyVest community. Now official part of MoneyVest community. That's great. Mike, Alistair, Fernando, good morning. And Bear Trap, Fernando's asking, well, it's more like going to be a bull trap. Bull trap is what we like to call it on the way up, because that's what's trapping the bulls. Bear trap would be trapping the bears. This would be considered as a bull trap, or at least the question would be around a bull trap and not a bear trap. Gonzo, do you think this is a dead cat bounce and tomorrow and Friday will be red? I think it's a really, Mr. B's Papa is how you pronounce it. Okay, perfect. Great. So I think it depends on a few different factors. I mean, we do still have a lot of FOMC members talking, and this week we're most likely not going to get the report from the Bureau of Labor Statistics related to the unemployment. So if we come down to the calendar and we look at the ADP payrolls, they came in at around 42,000. So 42,000 payrolls rising in October. There we go. There's a whole service error. Timeout. We don't even have that. So again, you can see so many things delayed, right? Construction spending delayed. International trade in goods and services delayed. Factory orders delayed. JOLTS numbers delayed. ADP numbers came out because it's a private report from ADP. So 25,000 was consensus. We came in at 42,000 jobs added for the month of October. A little bit better than expectations here. So that's a bit of a plus sign. But is this going to be some kind of a dead cat bounce, or are we going to see a bit of a bull trap here? Possibly, given the strong selling pressure from the last couple of days on technology on the back of AI names, AI stocks here. And this was the first level of support that we were watching for the S&P, right? So this is the first level of support at 6770. That's what's getting validated here for the S&P 500, and for the NASDAQ. We've got a little bit lower as a support threshold, closer to 23,000 for the NASDAQ, right? So from all-time highs, that's going to be a 3 to 4% drop, which I think is very reasonable. I think it's a very normal pullback for the NASDAQ, and that's going to be around 23,000. So that's where we are. Good morning, Karthik. What do you think about HIM's calls as it is at a bottom support? So are you looking at buying calls or selling calls on HIMS? What is the main question here? Because it is pushing up 3.6%. It is inside this, area of consolidation. So as you can see that we have been trading inside this range for a really long time. And we've got a very strong support right around here inside this green rectangle. It's going to be somewhere between $40 and $41, $42. So very, very strong area of demand. And resistance is going to be closer to $60 to $62 for hims and hers. So that right there is going to be that support resistance to watch for hims and hers, right? Support level is going to stay roughly around $40, $41 for hims and hers. So that's that. Bought a bunch of 200 shares of ETHE and also ETHT and BMNR just before the close yesterday. It's possible it can go down, but selling covered calls for a swing trade or a wheel. Look at you, Joe. Absolutely crushing it. That's great. Very, very good trades because BMNR, BITX, Ethereum, they're all rallying back higher on the back of this crypto recovery. However, I will still caution a lot of investors for a potential dead cat bounce because this can be labeled as a dead cat bounce after a severe 2-day sell-off in crypto, as well as individual stocks, including technology. And so I would not be surprised if you do see some kind of a dead cat bounce only to rotate back lower and for this sell-off to continue. Only because it's been long time coming. We've been expecting some kind of a healthy pullback and correction in the market for quite some time. And even if you look at the MoneyVest index and, all the analysis that we've done over the last several weeks, I mean, we've been trading in optimism for a really long time. I mean, for a good 4 to 5 months, the market has been in optimism and neutral. The last time we were below 3 was back in April, right? So April, May was the last time you saw the MoneyVest index dip below 3. It briefly dipped below 3 pre-market, but it has since been pushing higher and higher, hitting new record highs. So I think with that regard, all investors and traders need to be cautious with this market. Looking at the gap on QQQ is at 611. So let's take a look. So 611 is going to be on the daily time frame. It's going to be all the way down here. Yes, so 611, we've got a little bit of a gap there. This gap got filled, and this could be, you're right, Alistair, it could be the next potential gap for the NASDAQ. So we were talking about this as being a support. Sits right at 611. We've got a little bit of that gap to potentially also fill in for the NASDAQ 100. Seasonality November, December rally. Santa rally or coal this time? I think overall as a year, we've had a very strong year for the market and of course for individual stocks. So, but I don't think we've been bad or naughty for Santa to give us coal this year for the market. But it does, there are questions related to how long this rally can last. We were already on a 6-month streak here, right? 6 months of consistent rally, very, very strong. Of course, we've seen this back in 2017, even in 2012. We've seen these rallies in 2003, in 2011 even. Not 2011, but in 2013. So those are some years with very strong momentum, but eventually they do break. They do, break those rallies. And right now we're on a 6-month streak here. So November, we're already down about 1%. We'll see how long this goes on for. So, Sophie bought Palantir yesterday. Wanted to get AMD or Amazon, but they've gone up again. Yeah, so they're starting to see a little bit of a pullback. Advanced Micro Devices after the earnings dropped about 2.3%. It's still down a little bit. I would watch that support, and for Amazon, essentially flat right now. Amir, great content, dude. Keep it up. Being cautious is never easy when you have cash to deploy. Meta, Amazon, SoFi, Mercado Libre are the ones I'm unsure of when to get into. So we've got buy targets on all of them in our shopping list. And, I understand that sometimes the shopping list can be, the numbers can be a little bit far off, because if you look at the delta, we're talking about the cheapest or the closest one is going to be Meta, which is about 14% away. And then the next one is going to be 31%, 33%, 33%, 38, 39, and 66. So yes, I do understand that some stocks are really far away from their fair value, but that's just the fair value. Sometimes the light buys are significantly closer. This one's at 402, fair value 355. This one's 197, fair value 166. Light buy 201, fair value 179. So this delta is off of the fair value. The light buy is going to be significantly closer to the actual price itself. Same thing with other long-term stocks. As you can see, 4,500 is a light buy. 4,160 is the fair value. And you've got Booking Holdings as one of the stocks there. So, our job really is to find discounts and deals. And I really don't want to be chasing the price up. Just because there's nothing to buy does not mean that I need to move my prices up, right? Because I obviously do get a lot of questions around the shopping list, and I like to clear them up in a way that makes sense. And that is simply, this is where I believe the fair values are appropriate, given the expectations for earnings, given the expectations for the multiples. But just because there's nothing to buy doesn't mean that I need to move my prices up to make it look like, okay, we can actually go shopping, because we can't. I mean, this is the market environment that we can't really shop much. There's not really much to shop. Unless prices come down, there isn't really much to look at. And that's why when they do, that's when we've done the homework, we have understood the risk reward, we've understood the pricing, and that is what makes sense for us. So we can deploy capital confidently, understanding that, okay, we've done the homework, we've done the heavy lifting, and now we just need to execute. So the price should not change at all based on where the prices are. Your fair value should always be unbiased and objective. Okay, this is what I'm willing to pay at this price point, at this earnings expectations, and this is the PE multiple that I'm comfortable with. And that should be fixed with a little bit of flexibility. Sure, 5 to 7%, 10% can be plus minus, but your idea or your goal should be to get it in that range as close to as possible. Simple example I can give you is if you come over to SoFi, which is going to be here somewhere, right there, $17. $17 a light buy, heavy buy is at 14, fair value is at 13, right? My cost basis on SoFi is 18. $18. It's getting it as close to my light or heavy buy as possible. That's the whole idea. Even if I'm buying at $30, right? Even if I go out there today and buy SoFi shares, my cost basis might move from like $18 to $18.05 or $18.03, right? So even if I am sending out buy orders and people are asking, why are you buying it at $30? Well, I'm sizing up on my position without hurting my cost basis too much. So, there's two different analyses that we need to do. One is, are you adding to your position or are you starting a new position, right? Starting a new position, it's a whole different game plan versus if you are adding to your position, because cost basis, you don't want to dent your cost basis to a point where it gets very close to the market price. And of course, if you're starting a new position, you're starting it at the market price. And so that can actually, the risk reward cannot be as favorable as somebody who already has a position is just adding a little bit to their existing position. So how do you make up the shopping list? What math do you use? Are determinations to use? Is this only yours or do you mix analyst fair values as well? So this is only mine. I spent a lot of hours every quarter building this spreadsheet, and the spreadsheet then goes out to the developers. They put it on the website with the buy targets and all the stocks. All these stocks, the main criteria are the 3 M's, as I like to call it: addressable market. So how big is the market? The management and the moat, right? Those are the first 3 things that we analyze, which is the moat defensible? Is the management solid? And is the market large enough for the company to grow? Those are the first 3 things. The next things that we look at is quantitative, which is the company's financials themselves. They have to have a good balance sheet, meaning in most cases, negative net debt, more cash than debt on the balance sheet, more total assets than total liabilities, ideally even more cash than total liabilities, but that's not always possible. And the third is that they have to either be profitable or at least be on a path to becoming profitable over the next couple of quarters. So once we kind of dissect all this down, and then, then it's just about pricing the trade. Once you understand, okay, this is the company, then it just really comes down to where's the correct price point, right? What is the undervalued level for that stock? What's the fair value? And that is purely based off of future expectations, whatever the analyst estimates are, taking that into consideration, knocking down a few points, because, I always want to make sure that if there is any kind of downward revision in the earnings, like let's say for 2026, NVIDIA doesn't grow at 40%. It grows at 30% or 25%. I want to price that in. I want to actually go with a lower number in terms of growth, and also with a lower P multiple. And then once I do all of that, then I apply on top of that another 10% margin of safety. So yes, it's a very, very conservative way of calculating the fair value. And then once we also have is a no-brainer buy target. The no-brainer buy target is even more discounted on top of the already 10% margin of safety. So the reason why it's called no-brainer is because if those prices get hit, it's quite literally a no-brainer, because the no-brainer PE would be really, really low. I mean, we're talking, for a lot of these stocks, we're talking 17 times earnings, 21 times earnings, 9 times earnings on the no-brainer PE here, 16 times earnings, 21 times earnings. So, these are companies growing at 20, 30, 40, 50%. You're getting them at 9, 10, 15 times earnings. So yes, it makes no-brainer purchase price, like no-brainer buys. So yeah, that's what we have. Why do you know why ANET dropped heavily after earnings? So ANET is also part of the shopping list, by the way. It's been a great company. In my view, I think it's phenomenal business. I think the overall sentiment is starting to shift a little bit on semiconductors. So even if they do come out with some very strong beats and guidance uplifts, we're seeing a bit of a pullback. I mean, we're seeing a double beat here. And let's take a look on the actual numbers. So let's see. Total revenues, $2.3 billion, 27% increase year over year. And gross profit, $1.49 billion, 64% margins, up from 64.2% same time last year. Operating income, up 24%, $978 million, $853 million of net income, 67 cents in earnings per share. And overall, I think numbers are phenomenal. And if there is any kind of a pullback, I would argue it's only a good thing. It's only a good thing if we're seeing red for Arista Network. And so, of course, on the weekly time frame, very overbought. RSI MACD L3 Banker Oscillator was trading at a bit of an overbought and overstretched levels. And so right now we're seeing a bit of a pullback. That's all it is. Same thing with AMD, coming in with a very strong quarter. Revenue beat, earnings beat, guidance beat, and then what happens? Well, stock drops 3 to 4%. So I would watch 129 as a support level for Arista Network. In the shopping list, the difference percentage, is it based on no-brainer buy targets? It's based on fair value. Based on fair value, Suresh. So that is what we base it off of, because fair value is where the stock's intrinsic value is according to my analysis. Of course, fair value can vary based on what you might assume to be the earnings expectations and cash flow expectations for growth and the different PE multiple and the different margin of safety as well. I mean, people who don't apply any margin of safety, 0%, their fair value is going to be higher versus somebody who's applying a 10%, 20%. I have even seen investors apply a 40 to 50% margin of safety sometimes. So it's essentially cutting down on your fair value by half. Whatever your fair value is, cut it by half after applying a 50% margin of safety. But we calculate the delta on the fair value with a 10% margin of safety, and no-brainer is even lower than where the fair value is. Okay, any reason why I get early assignment on shares? I sold 20 BITX puts weekly. 2 of the puts got assigned without me overnight on Robinhood. Is this a bug maybe? It could be a bug, but did you get an email, Gary, from Robinhood that your options are getting assigned? Once the option is in the money, the buyer has the full right to exercise their right to buy or sell shares, depending on whether it's a put or a call. And as sellers, we have the obligation. We have to fulfill, right? A contract becomes very much exercisable once the terms are met, which is, if it's in the money, then the term is met and the buyer can exercise their right. And us as the sellers, we have to obligate. We have the obligation to fulfill the responsibility to either buy or sell shares. And so in that case, then, yeah, I mean, they can absolutely do it. You got an email overnight. I didn't click exercise. That's the thing. So weird. So I'm curious. Are you the buyer or are you the seller? Because earlier you said why I get early assignment on shares. You sold 20 BITX puts. So I'm assuming you sold puts, right? So you were obligated to buy if it was in the money. So you didn't need to click exercise. You didn't really have the right to click exercise. The buyer exercised you have the obligation to buy them, which from the email it looks like you did. Okay, let's see where the markets are trading here. Joe, great opportunity for me to lower my average cost basis. Perfect. Good morning. Are these stocks good for CSPs at 30 delta from the current price, STX and WDC? Let's take a quick look here. So Seagate asking about thoughts on good for CSP at 30 delta. So, I mean, I usually try to avoid selling puts on a huge green day. STX up over 2.6%, but if we take a look at STX options chain, depends also on the expiration, right? I don't think you mentioned the expiration. You just said 30 delta, so I'm gonna assume, let's say next Friday, 30 delta is going to be very close to the money, 245, $7.80 is the premium, so that is really good in terms of the ROI. So, I mean, you wouldn't expect anything else from a 30 delta, but we're looking at 780. So the return on collateral is about 3.3%. So 3.3% for 9 days is very, very good, as long as you're comfortable with getting shares at 245 for STX. So with any kind of put option, the one thing that I always tell investors and traders to be mindful of, that if you are selling a put, pick a strike you're comfortable buying the shares at. Okay? So we got a whole PDF. We've got a whole checklist for running the wheel strategy on options, right? You can find that on the on our platform. So if you go here, let me just go over to, let's see, I'll go over to collections. So options trading, we've got a whole PDF, right here. So this is the options trading checklist. It's a free PDF that you can download, of course, as part of the course or the membership. So once you download this PDF, there's going to be a 2-page PDF with 44 points, 44-point checklist that I think every options trader needs to know about. This is like your guide to trading options if you're selling them, for the most part, right? If you're selling them, then this will be very helpful, because we break it down into quant data, like quantifiable data, like conviction level, right? What's your conviction level? You can't quantify it, but you need to. In order to actually sell puts, you need to sell puts on stocks that you have at least 80% conviction, right? Anything less than that, then you're not going to be very excited about assignment, and eventually options will get in the money. As much as you try to avoid it, eventually options will get in the money. Doesn't matter if you're selling a 5 delta, 10 delta. At some point in your options trading career, options will get in the money. So you cannot avoid assignment at all times. So only sell CSPs on stocks that you want to own and you're bullish on and you've got a high conviction. So this will go over everything related to that. So iron, let's take a look at iron, and we'll take a look at Novo Nordisk as well. So let's talk about iron first. I've got a covered call at $70. Iron's given me a lot of roller coaster ride here. It's been up to 72, getting up to 75, trading back down to 63, now at 69. It's been all over the place. So got 2 more days. Iron just needs to stay under 70. If it trades back above 70, then I'll evaluate the situation on Thursday. I'll see if I really want to roll my option or keep it, depending on where the price is. So for that, I'll obviously be watching crypto. I'll be watching, just the overall market. And if it gets up to over 73, 74, then I'm most likely going to have to roll my option out further. So Novo Nordisk down about 2.3. Unfortunately, this has been the overall downtrend for Novo Nordisk. So you can clearly see the lower highs and the lower lows. Healthcare has been struggling. Biotech, healthcare. It's no surprise that this sector has been under tremendous pressure. So if you come over to healthcare, year to date, it is just up 4.95%. But of course, there's a lot of stocks that are not going anywhere. Vertex, 4.6% higher. Novo Nordisk, Hims and Hers, a lot of them have a very similar trajectory of downtrend, of lower highs and lower lows. So I would watch that support down here at close to all the way down here at around $45.50 to $46 for Novo Nordisk as a support. Hector, the shopping list is going to be available on the platform, on the MoneyVest platform. All you have to do is just simply log in, if you are a member, of course, and then you will be able to get access to this entire list. I'm going to put the link in the chat. If anybody's interested, obviously you can access, and I'm going to be updating this list after the quarter with the new values and new buy targets and new stocks also going to be added, right? So every quarter we try to add like a couple more stocks. I just added 6 or 7 new names to the shopping list, and my goal would be to kind of round up the list here to close to 40 by the end of this year. Okay, Shopify after earnings. Monkey Queen, hello handsome, hello. I want a lifetime membership. We can talk about that, definitely. Email me at admin@moneyvest.com. And if that's something more and more people are interested in, I'm more than happy to kind of figure something out with that regard. Luckily, it was a price I didn't really mind, 46 bucks BITX in the beginning of the week. LOL, I'll be holding and waiting for crypto to hopefully get an end of the year rally. Yeah, so crypto obviously is going to be the main asset class to watch if you are trading BITX, BMNR, any of the crypto miners or crypto ETFs or crypto stocks. So as Bitcoin is selling off, as Ether is selling off, so will BITX and BMNR. That's why it's important to kind of make sure that the risk reward is favorable for you. How far are you from your mobile app? So we need to get the redesign launched out first, and then in 2026 we're going to be working on the mobile app. Axon. So yes, Axon is also phenomenal business, great profitability, great balance sheet. Drops 22% on earnings here. So we did get a little bit of a miss on earnings. Revenue came in with a small beat. I am still yet to analyze the earnings here, so I will definitely be sharing more updates on Axon over the course of today and later this week. So I've got to catch up on the earnings here, and we'll share all the updates with the valuation coming down. Valuation was already pretty high, but it's, again, a super profitable business with a very, very strong cash position relative to debt, which is only $2 billion, and the balance sheet's also phenomenal. So 556, which seems to be getting broken right now, all the way down to 464 is going to be that support for Axon. Yes, Mark, just email me, admin@moneyvest.com, and I'm more than happy to help. All right, so trade desk and oil. Let's take a look at oil for Akash very quickly. So, we got up to that resistance at $62, $63, and then we sold off a little bit. Right now, we're just consolidating sideways. If we do break down further, next support is going to be all the way down as low as $55, $56, right? So that is going to be that support level in case we get a break below this $60 per barrel level. So that is going to be that support. Next target closer to $55, $56 for crude oil. Trade desk. Let's take a look. Consolidation. I mean, Trade Desk is one of those companies that I feel like is gearing up for a potential break to the upside, but the earnings really need to accelerate for this company. So, as I said in my previous live stream, I think Trade Desk is going to be more of a 2027, 2028 play if they can really accelerate those earnings back higher. So this could be, an area or a time where accumulation comes in. And then in a year or two, maybe like, let's say 16 quarters or so, when the company starts reporting those year-over-year growth numbers again, we could be back up to 140s and new all-time highs. But it's going to take time. Shopify, yes, let's take a look at Shopify very quickly. So trading at all-time highs, I would say resistance closer to all the way up here, 186, 185. That's going to be that level. Coming over to the weekly, seems to be on a very strong uptrend. So higher highs and higher lows within this channel for Shopify. It does feel like it wants to come down. It looks like with the overbought RSI, MACD, L3 banker oscillator, you're coming up to this, confluence of resistance with a previous resistance here and also inside this uptrend. So if you do get a pullback, I would not be surprised to see Shopify down at $94-95. And of course, that's crazy to think about, but it is a possibility. We've seen Shopify drop many times, like 50% here, 44% here. This right here was a 34% drop. So about $100, reasonable support. So gold, GLD. Gold is, I think, back over 4,000, almost back up to 4,000 again. And it's validating that support right here inside this green rectangle. That's the level that we have marked out on a 4-hour chart. You'll notice that it's just been consolidating sideways. Buyers indeed stepping up around 3,900. If it does break up of 4,050, then we're back up to 4,150, 4,200. That's going to be that level to watch, with, of course, a very strong support down as low as 3,900 right now for gold. So that's where we are. So pre-market seems to be a good recovery so far for this entire market. Of course, overnight we were selling off quite a bit, and right now we're seeing a nice little recovery for a lot of individual stocks as well. Over $720 billion worth of sell-off yesterday. So not a whole lot. It was okay. It wasn't crazy. So let's listen in on what Josh Brown had to say about this market. And then we'll listen into what Tom Lee had to say about this market as well.
And we are back on halftime with Josh Brown's best stocks in the market. Josh, what are you focused on today?
So one of the things that I think is relentlessly fascinating about the markets is how easily price can change your mind. And so when we saw gold earlier in October making the gold stocks making all-time highs along with the price of gold, everyone said, all right, this looks overdone, or I missed it, or I'll buy it on the dip. Well, the dip is here. Newmont Mining is now in a 20% drawdown from that high, and still in a longer-term uptrend. So for all the people who said, I can't believe I missed it, I'll buy the dip, congratulations, here we are. Who wants it? Not many people. It is now below its 50-day, which is where historically it had found support the entire way up. And so far, this wrestling match looks like the Bears have it. You could say the same thing about Anglo Gold Ashanti, AU, also on the best stocks in the market list. The third, which we talked about, Southern Copper, that pullback actually looks more orderly, and that one's actually holding its rising 50-day as well. So I think I'm just pointing out here, these are strong stocks and big uptrends. Over the short term, they're finally pulling back to more reasonable levels. Some of that froth is coming out of these trades, possibly because they got caught up in a lot of momentum portfolios because of how well they were doing. Now, if you felt like you missed it, now's your opportunity. I'd be taking a look at all three of these right now.
Josh, you point to what could be, I guess, another catalyst for these names longer term, the fact that we have low oil and gas prices, and the fact that we're going to see a slight production increase from OPEC. It seems like it would keep those prices low. Can you kind of explain that thesis really quick?
Yeah, one of the key input costs to operating a gold mine is energy prices. And so long as energy prices remain low and the price per ton that they can sell of gold, silver, copper remains high or elevated, that bodes well for profit margins next year, which obviously flows down through to earnings per share. So these companies probably are on pace to report some of the most profitable quarters they have ever experienced. That explains why these stocks have done so well this year, because the stock market is already anticipating that. However, that dynamic probably doesn't change very much so long as oil stays low and gold prices remain somewhat elevated. So if you were looking for an opportunity to buy a dip in a bull market, there aren't that many of them in gold over the last year. This is the opportunity.
All right, Joe, you also own Newmont. Your take on just the idea of this company and that trade?
Well, I agree with Josh. If you're looking for the opportunity to get into precious metals, which have had a very strong year, okay, you're in the midst of right now a correction. Just be prepared and understand that that correction can continue. So you might be buying and have to incur a loss on your initial purchase. You're buying for the long term here. For the month of October, and really for the fourth quarter, let me better state, you're seeing that the U.S. dollar is actually rallying. U.S. dollar is up about 2.5%. That's having an effect on commodities. It's having an effect on silver and gold and copper itself. So I think a lot of that is coming into play. I also think there was a degree of exuberance. I sent a report to a good friend of mine, natural gas trader Daniel Fisher, and it was saying in the report that big trading companies, commodity trading companies, were looking to hire gold traders globally around the world. He remarked back, "Well, maybe that's the sign of the top," and I think Daniel's right on that.
All right, gold pulling back.
Two things I want to mention. Southern Copper Corporation. We've been talking about this stock for a really long time. My first video on this came out in 2022. Absolutely incredible stock. Definitely put this on your watch list. It's got a pretty decent dividend yield, and it has been pulling back a little bit. I mean, it still has had a phenomenal year. I mean, year to date, the stock's up 45%. From the March-April dip, it's up over 83%. So this one, put this on your watch list for sure. Second thing, take a look at that mic. Does that look familiar? Does that look familiar to anybody out there? Doesn't it look alike? This is the same exact mic, same exact microphone that I had in 2022 when I was recording my videos. And that's the red mic. That's the red mic that started this entire bear market in 2022. And then it died on me in October 2022. Our good friend, yes, it's right there, peeking right above. I love it. I love it. So you're already starting to see a little bit of that hint of the red mic coming in to life. I think I need to bring it back in 2026. I think after a 3-year bull market, the red mic gods are finally calling me to bring out the red mic. Should we do it? Should I finally get us the red mic in 2026? We've got a poll going on now. So definitely participate and let me know. Hey, it only means good deals. So I'm giving you a heads up. 2 months, save up cash, get more, prepared, be ready. There's going to be deals in 2026, giving you a heads up right now. So we can all be ready, It's, wow, 78%. I'll be buying puts when you revive the red mic. Yeah, I need to take it out of my closet, give it CPR a little bit, and then finally bring it back to life. But anyway, so market's about to open in about 8 minutes here. We're seeing nice little flat open on the back of some ADP report numbers coming in 45,000 versus 26,000. That was the expectation. 25,000 was the consensus, coming in at 42,000. But of course, we're still not going to get any of the unemployment report numbers because of the suspension, right, of the BLS. So that's going to continue when AI hype hits gravity. It's also funny that all of a sudden, now AI stocks are overvalued. They weren't overvalued up until yesterday, 9 a.m., but they were overvalued at 9:30 a.m. 30 minutes later, they were all of a sudden expensive and overvalued. So Monkey Queen, I'm going to buy real estate in Dubai. Any suggestions? Well, yeah. In fact, the reason why I was late today is I just closed on my second property. So, third investment overall, but another investment property. So, yeah, we just had the transfer this morning, just got that done. And we'll be posting a lot about that on the real estate channel. It's a good way to diversify. It's a good way to make good returns. Did the first deal 21, 22% in 10 months, and then the second deal right now it's about 35% in a matter of 6 months, and the third deal, we'll see if the projections play out, if the forecasting and the underwriting from my side is good, then we can expect some similar returns. But your neighbor is selling. Well, I can definitely find you good deals. So definitely reach out if you are interested. Been working with a lot of investors that are interested here. Where is your real estate channel? Well, I have a Money Invest real estate channel that you're more than welcome to check out. So I'll show you. I post a lot of videos there. It's not as popular, or I should say it's not as many people, follow that channel, but still, I think it still brings a lot of value. So this is the Money Invest real estate channel. Yeah, 2,700 subscribers, not a whole lot, but if you come over to the videos, I do post a lot here. They're more like vlog style videos and going over the entire deal, the spreadsheet, the returns, underwriting, all that. So the entire process, step-by-step process of all the numbers, kind of showing you around the exact unit, inspections, working with lenders, all that. Yeah, bought your calculator. It's top notch. Perfect. Yeah. All the stats, but this is all about Dubai. So a little bit different. So, all right, everyone. So let's get ready for this market open here. And if Elon gets a performance package, what to expect days and weeks. So I think, if it gets approved, which I do believe that it will, of course, the Norway bank, the sovereign fund, said that they're not going to cast their vote in favor. In fact, they're going to be against Elon Musk's pay package, but they were against Elon Musk's pay package back in 2024 and 2018 as well. So it's nothing new. We already kind of understood and knew that they were going to highlight the key man risk and not go in favor with the pay package. But I do still believe that there is a overwhelming majority that is going to pass it for Elon. And I think it's going to add even more motivation on his end, on his side, to grow the company. I believe the market is big. I believe the robotics and the physical AI is going to explode over the next 5 to 7 years. And Tesla's at the forefront of this massive market. It all comes down to execution. And the good thing is that Elon is not going to be distracted. Of course, at the end of the day, it's Elon, so nobody really knows what's going to happen. But it's good that I think Tesla is going to be at the forefront, the main focus, and then all the other projects that he's working on. But I think if it does get passed, we are looking at Tesla as potentially, again, this is just pure speculation, but being a Tesla investor for a long time, I can tell you that we like to dream big. As investors and as the management likes to dream big. So if it does get passed, I think 3 to 5 trillion minimum, to as much as, of course, talking about 20 plus years out, what the valuation is going to look like then. But I think it's going to be pretty big. So, and it's gone through a lot. Every time, something comes out. Tesla's been, I think, probably the most covered stock over the last 5 years. You go back to COVID 2020 all the way 5 years. It's only been 5 years, right? Seems like an eternity, but it's only been 5 years, and it's probably been the most talked about and the most covered stock on social media, on news, on media, financial media, everywhere. I think Tesla's been at the front and center of all conversation. Of course, Nvidia has kind of stolen a little bit of that thunder recently after the rise of AI, but Tesla's still got its fair share of conversations, and it's been so volatile. And every time it drops, we know the same people come back out saying that it's going to go down to zero. Its valuation's expensive. It's going to be a dead stock. This, that, everything. And Tesla's proven all those investors wrong over and over again. So instead of sitting at an all-time high, $1.7 trillion market cap. So a couple things you just don't do. Never bet against Elon. Don't short Tesla stock. All those Tesla dips is when I own the stock. Perfect. Now Palantir is taking its place. I agree. I think Palantir is certainly a very, very hotly debated stock. It was more so back in 2020, 2021. And now, it has come back to light, especially after Michael Burry's short position. So what does everybody think about the short position here from Michael Burry? I mean, 1.4 billion of that, 1 billion in just these two positions is a pretty big deal. I mean, 66% of the portfolio. You got to respect the man. He's putting his money where his mouth is. He's not just talking a game. He's actually playing the game. Almost $1 billion worth of puts on Palantir, $186 million worth of puts on NVIDIA. Makes sense why NVIDIA is a lot lower than Palantir, because Palantir's valuation is significantly more than NVIDIA's, but that is a pretty large short position. Anyway, so markets are open, everybody. So we are open for business. Tesla getting up to 454. I'm just going to turn that off here. NVIDIA essentially flat. We got QQQ's flat. We got S&P 500 flat. And crypto is also moving higher very nicely. So we're seeing a nice little recovery there for Ethereum, for Bitcoin. As a result, BITX, ETHE, Mara, Riot, CleanSpark, Coinbase, everything starting to move up very, very nicely. So thank you so much for joining, everyone. I really appreciate you all. Again, have a great, fantastic start to the day or end to the evening or the day, wherever you guys are watching from. Again, thank you so much, and hope you all have a fantastic Wednesday. I'll see you all once again tomorrow morning for the live stream. Happy investing. Again, any questions, email me, admin@moneyvest.com, and link's going to be down below if you're interested in joining us. Take care.